Hello and welcome to Crypto Weeklies. In this video, we analyze Sandbox and the Sandbox and its token SAND. None of the content is financial advice. Right now, the price of SAND is at around 16 cents. It has come up quite a bit in the last few days. Again, you can check out over the last 7 days over here. The SAND is the third most rallying crypto, at least the ones under the major ones, up by about 40% over the last 30 days, up by about 47%. Price is at around 16 cents. Circulating supply at around 2.6 billion, and volume is at around 230 million. Almost half of the market cap is the daily trading volume. So over the last 1 year or so, let's check the difference between the price versus the market cap growth to see, as this particular crypto does not have a max supply, to see what is the relationship between the price and the growth and the market cap lack of growth, let's say. So this is the market cap view. Essentially declined over the course of 1 year from 1.3 billion to at one point less than 300 million. So again, in terms of percentage decline, that would be somewhere between uh, 70 to 80% decline. Price also from that 55 cents at one point declined to about 10 cents, which is again similarly 80 to 85%. So price declines at a sharper rate than the market cap. Again, that is expected as newer tokens are unlocked for Sandbox. Again, unlock progress is set to be over. Again, was set to be over in Jan 2025, but again, the total supply is at around 3 billion, out of which 2.66 billion is in circulation. So more or less, most of the supply is in already in circulation per the total supply view. Now coming to the price analysis again, as Sandbox has completed more than 200 week, it was launched in August 2020. At one point, the price was at around $9. Now it's again reeling at 16 cents. In terms of percentage drop, that is around 98.9%, almost 99% lower than what was Twitter in 2021 high at that November euphoria phase of 2021. This time around, the price barely budged. Any of the Fibonacci levels didn't even come close to the 0.23 Fib level during the euphoria phases. That would have been a rally to $2. In December, the price did go close to that $1 range, but failed to go beyond that. You can see that was the rally to the 200-week simple moving average in the um, early part of December 2024. Since then, there hasn't been any major rally in terms of the Sandbox, and that has pushed the 200-week simple moving average down with the price. Now the 200-week moving average, simple moving average, is at around 56 cents. So let's see if there is a rally back to the 200-week simple moving average anytime uh, in 2026. Again, if that were to happen, again, and the 200 week is a declining function, so it could be, again, if it takes middle of the year, the 200-week simple moving average could be at around 28 cents. So again, that would be almost less than 100% rally from here. Coming to our own website, cryptoweeklies.com, link on the bottom of your screen. The forecast for Sandbox and its token SAND is, if there is a bull run, a short non-euphoria bull run in the next 6 months, again, let's say 3 to 4 months out in the future, towards end of April 2026, the price ceiling is at around 30 to 33 cents. That could be a rally back to that 200-week simple moving average, again extrapolated to around 33 cents. So that's still within the realms of possibility for Sandbox. Again, not financial advice. This is the price trend on. This is the machine learning model trained on the weekly price of SAND since 2020. Again, it's not AI generated model. It's a statistical and machine learning based model with standard deviation based confidence level. So this is the yellow line is the bull case for SAND with a non euphoria bull case. Ceilings at around 68 percentile or one standard deviation bull case. This is one standard deviation bear case. Let's say if price has to, if it has to go down in the next 3 to 4 months, the floor is at around 5 to 6 cents, higher like 5.5 cents, between 5.5 cents and 6.5 cents. So that drop, if the price were to drop from here to that 6 cents level again, it would be kind of catastrophic, considering, let's say, the price did not do that well in 2024-2025 season. um, a drop to 7 or 8 cents would be around 60% drop from here. uh, and again, that would be a panic case for sand. Per the machine learning model, the DCA model says that right now the risk levels for accumulation, again, this is the regression based risk, the non-linear polynomial, two, 2 degrees of freedom quadratic interpretation of what the fair value is for sand is at around 8.8 cents. If as the price is above the fair value, there is some risk involved in accumulation at 1.13. When the price goes significantly lower than this uh, gray line over here, that's when the DCA color codes either shift to this purple zone and the risk gets lower than zero point 0.1. So that if accumulating only at those level again, although again this particular asset did not have a significant bottoming analysis or bottom hold throughout the course of the bear market for sand, which essentially started in May 2022, and again barring a few days in December January 2024, the bear market kind of never over for sand. So unfortunately, again, any DCA in this area again would still need some more evidence, such as from the time weighted average price model. If there is a, again, as the price has consistently been below the time weighted average price since that time, May 2022, the time weighted average price is this blue line over here, which helps identify how long the price could hold some of the levels based on the time spent at those levels. So that time weighted average price is coming in at around 78 cents. Again, this is where the 200-week simple moving average kind of took off and is kind of had its first major decline and then came to that 70-75 cents level before having a secondary decline in the later half of 2025. So the time weighted average price definitely signaling again the price is lower than the time weighted and has been lower than the time weighted average price. But personally speaking, unless the price is more than 50 to 70% lower than the time weighted average price, that would be again lower than 24 cents for sand. That would be a good accumulation zone. As the price is lower than 24 cents at this point, again it does have an accumulation signal on for accumulation in the bear market. But before we do that, we'll definitely look at the 20-week simple moving average risk, which is also not which has also not dropped as much as it should have in the bear market drop. This is because the price is really close to the 20-week simple moving average. Right now, the 20-week simple moving average price is this red line over here, which is at around 18.5 cents. If there is a drop like there was where the price came running to the 20-week simple moving average over here, failed to go beyond it, and then from that 29-30 cents in September October 2025, the drop was almost 11 which would have been, in terms of the percentages, drop around 60%, if I'm not mistaken, from here to here, around 60-65% drop. That drop again either is behind us, or again there is one more leg where the price drops in the bear market of 2026. So all in all, if we were to look at any accumulation or any estimated bear market bottom for Sandbox and its token Sand, uh, the base bear case is behind us. Again, price is lower than 19 cents, which was the base bear case. That's why the drawdowns are in positive, because the current price is lower than the bear case target for sand. That means it has at least signaled that base bear based accumulation. That means the price has bottomed in that base bear market based analysis. If that means the price has been lower than one of the bearish target, but the panic case is still ahead of us. That means The worst that this bear market could do in terms of a non-recessionary panic in the asset class is at around 12 cents, which is about 25% lower than the current price. And the recessionary macro drop in the wider asset class could take sand's price less than 10 cents. Again, price for sand was lower than 10 cents during its launch, so it wouldn't be too outlandish to expect sand to do something worse. Again, it has been doing a lot worse since 2021 drop began. Again, the price has essentially been lower, 99% lower than its previous high. Again, and during the launch and again the bearish phases of that 2020 year, the price did go lower than zero point 0.7 cents. So that's what theoretically could be possible in right now. Again, from the current price, it would be a 40% drop in a bear case scenario. Let's conclude on a bullish outlook. If there is a bull market ahead of us, let's say in 2028, 2029, if sand manages to survive this bear market and has a bullish 2028 2029 per hour models, the price could go above $1.57. Again, that would, again, in the larger scheme of things, I know it looks really bullish from here, but in the larger scheme of things, that would be a rally just lower than the 0.23 fib level. So the 0.23 fib level for sand is all the way around $2.09. So in the next bull run, if there is a major blow off top, which we did not see in 2024 2025, there wasn't a major blow off top in terms of altcoins. So if that kind of a bull run is ahead in the next 4-year cycle, a rally to 0.23 fib level from the previous all-time high is not too outlandish to expect, but again, that is almost 10x of the current price. In terms of the base case, the bull case is also at around $2. Sorry, is at around $1.62, which is slightly more than 10x of the current price. And the moon peak, if let's say everything lines up perfectly, if the metaverse narrative takes off, and sand again contributing to that narrative, if that kind of manifests perfectly, that's about 15 to 16x of the current price. With that, I would like to conclude by saying again, 2 to 3 models have signaled accumulation for sand. Again, not financial advice, but again, the risk of the bear market bottom is always ahead of us, and especially for altcoins where there isn't much adoption, the floor can uh, easily again be much severe drop than what is forecasted by these models. So there is always risk, but again, if there is a bullish phase in the next bull run, there is some reward in terms of these models estimating what the price could do. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.